I'm Caroline Hyde. This is the best of Bloomberg Technology, where we bring you all our top interviews from the week in tech. Coming up, all the industry leaders from this week's Consumer Electronics Show, including our extended conversation with IAC founder and chairman Barry Diller. Plus, AOL CEO Tim Armstrong joins us as Verizon continues to mull its Yahoo options. And Tesla swerves. The electric car maker's latest delivery numbers miss estimates. First to our lead, and the biggest tech trade show of the year, the Consumer Electronics Show, took over Las Vegas this week here in the United States. The annual spectacle offers an early glimpse at the top tech themes to watch in 2017, from smart home improvements to driverless car technology. Another big theme? Well, the path forward for media and new competition in the field. Bloomberg Technology's Alex Webb caught up with media industry leader, IAC founder and chairman Barry Diller. Take a listen.
If your stock is subject, more than for a day or two, to his comments being a negative drag on you, then you got a very lousy business. And it's all, it's all today's ridiculous silliness.
There was some other merger efforts last year in this similar space. CBS Viacom obviously fell apart. Do you see any likelihood of that deal being resurrected?
No, it could have never happened anyway.
Oh, really? Why do you think that?
Well, because if you're a CBS shareholder, if you're on the CBS Special Committee representing the shareholders, you are not going to buy Viacom at anything but a bargain sale price.
Okay.
If you are on the other side on the Special Committee, you're not going to sell it at anything but a premium. So it was never going to happen anyway. So I don't know why everybody made noise.
How would you try to turn around Paramount?
How would I try and turn around Paramount?
Or is there a way it can be turned around?
You make good movies, it turns. It ain't hard.
You just don't think that movie
business is the simplest business, compared to what's going on here and compared to the changes in the world. I mean, narrative storytelling on a big screen, or a small screen, but on a big screen is very simple. You have a story, you tell it, and people either like it or not. There's no tech involved. There's no, it's quite binary.
I mean, on the flip side, of course, a lot of tech companies are increasingly looking at the content space. Netflix is the obvious example. Amazon has made huge strides in this space. There's been a lot of talk about the prospect of Apple getting into the space. Do you think that companies need to own content to be able to get into them? And why is that?
Because all of the content, look, if you own content, you want it distributed everywhere. So these tech companies who are engaged in distribution, which is what Apple is doing, it's what Amazon has with Prime, et cetera. They're essentially distributors. They can buy anybody's content. They don't need to own directly the content. Now, if they're going to actually begin to produce content themselves, then that's another thing. But that's something you have to really have not tech aptitude for. You actually have to have an ability to make editorial choices.
The Vimeo signed a deal with Lionsgate recently.
Yeah.
I'd love to hear sort of how that came about, actually.
Well, we're developing Vimeo into a platform for everybody to use, and we've gone to many, many people. And one of the most recent places we went and said, why don't you put your programming on Vimeo, on our platform, and they said yes, and we're going to do much more of that.
So are there a few deals impending that we need to keep an eye out for?
Yes.
Can you give us some sort of time frame?
No,
weeks, months?
No. Look, we're very much now in business.
Okay.
So weeks, months, years, we're going to be at this. And we think because we have an independent platform that is actually not owned by any of the totalitarian companies, that we have a niche and a chance that because of that independence, we can barrel through.
Does that mean that, now quite often when you talk about the online video services for TV series, films, you tend to talk about Netflix, Amazon. Is the hope then people go Netflix, Amazon, Vimeo?
Of course.
So it's going to be a direct competitor to those guys?
Well, I think an indirect, because the truth is, Netflix is always going to be, unless they monumentally screw it up. They have such size worldwide now that I don't think anybody is going to be close to Netflix. But that doesn't mean they take essentially the market share of the world. I just don't think anybody will be as large, but I think there'll be plenty of room for niche programmers and programmers that have, many, many millions of subscribers, just not to their level.
What's your take on the way that the cable TV bundle is developing? Is it dead? Are these new approaches killing it?
Well, they're not, I don't think anything really kills anything like dead. But look,
perhaps unraveling.
You've had for 40 years or so, you've had cable being the only place that you could get a bundle of programming. That's ended. Now you can get, all you need is an internet connection, and you can get a la carte, you can get little bundles, etc. So cable just has to evolve, and it cannot, its base of warehousing everything and selling it for one package price is gone.
What do you think then does work? You mentioned a few possibilities. What are you particularly bullish on being the model which does go through?
Go through where?
Well, I mean, the successful way for the cable package to evolve.
No, I don't think that. I think that the cable operators are essentially now in the data transmission business and no longer really in the program business. They used to be in the program business, it's very healthy margins. Those have decreased as programmers have asked more and more money. Now, when you have so many different alternatives, they're in the data business. That's their competitive edge.
Does that explain some of the rationale behind the AT&T Time Warner deal? There has been a certain amount of skepticism, aside from the Trump element, of course, but from an operational perspective, skepticism behind it. I don't know if you think there is a logic behind that deal.
Well, I just don't think there's a lot of industrial logic behind it, but because I don't think that a data company needs to own a content company or a tech company, data company. AT&T needs to own content. It can buy the content at fair market prices. No content, I think, in this area is going to be particularly exclusive.
Still ahead, we'll hear from AOL CEO Tim Armstrong, who's still hopeful that Verizon's Yahoo deal will go through. We'll ask him about the potential hiccups next. And a reminder that all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out at Bloomberg Tech TV weekdays. That's at 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Alibaba continues to crack down on fake vendors, this time taking legal action against 2 sellers. It's suing the parties for selling counterfeit Swarovski watches and is seeking $200 million in damages. This is part of an aggressive plan to combat fake goods from popping up on the site. Alibaba's reported it took down 380 million product listings and closed about 180,000 store platforms in the last 12 months. Now, cybersecurity is a hot topic from Washington to Wall Street, especially in light of this week's US Senate hearing on Capitol Hill to determine whether the Russians did in fact hack the presidential election. And Yahoo announced last month that it suffered its second major data breach, one of the largest in history, leaving some to question whether Verizon will follow through on its $4.8 billion acquisition of the company. Bloomberg's Corey Johnson caught up with AOL Tim Armstrong for more from the Consumer Electronics Show in Las Vegas.
The Yahoo deal for us is strategic towards our 2020 goals. We're hopeful it will close. The process for us is split into 2 areas. One is the integration and strategy planning with Marissa and the executive team at Yahoo, which has gone very well, and we have very close relationships with them. The second piece is the information that's come out about the breaches and what the effect of that is. Verizon's handling the breach research with Yahoo. Yahoo's going through their investigation, so we won't have any comments on that because Yahoo hasn't finished that investigation yet. But on the strategy and execution side of things, we're on track and hopeful that the deal will close overall. But we'll know more in the first half of this year. And I think that the Yahoo team is doing a thorough investigation. So I'm sure they'll have more to say about it in the time period in front of us.
Yeah, is it theoretically possible that these series of hacks and the public's knowledge of them has any effect on the brand and damages the brand of Yahoo in any way?
I think that's one of the things that Yahoo's looking at and will continue to look at is, the total effect of what the breach was and what the outputs of them are. And of course, we have a viewpoint on that as well. But I think from a standpoint of where we sit right now heading into 2017, our strategy is clear heading towards 2020. Yahoo is one piece of that strategy overall. So as we get information about the breach, we'll update people on that, and Yahoo will as well. But, I'd say that from what our goals are and what we've been tasked with of getting done with Yahoo, it remains on track, and the breach is a piece of research and information and investigation that's still ongoing.
I think that the size of the business of Yahoo is not properly understood generally. I mean, I think it's because it's just such a very big business and so many users. When you look at that asset, what do you see that holds such value? Because the noise of the headlines and the concern over the breach, I think, tends to dominate the discussion. What do you see as the underlying asset and its value?
Yeah, Corey, we live in a world today which there's hundreds of billions of dollars and there's billions of consumers coming online that are all digital first and mobile first. Yahoo is one of the largest footprints in the world on the consumer side and has a very sizable advertising business and an e-commerce business in Asia. So from our standpoint, when we look at this asset, the combined asset would have over 1 billion consumers, do billions and billions of dollars in ad revenue and have a very big footprint in mobile, added with Verizon, which is very strategic. The Verizon opportunity with data and targeting and getting to mobile consumers is huge. So, I think there is the breach information and the breach investigation, but from a business strategy standpoint, especially when you look towards the next 5 to 10 years, the assets coming together represent a very unique opportunity, a very unique scale. And look, we've gone from company consolidations to industry consolidations, and Verizon has been very forward-thinking, very clear on the execution of where they think the world's going in media and in wireless and mobile, and we're excited about it. We're excited about Yahoo, excited about the team overall, and there's this one issue that needs to get resolved, but I'd look through that from my side on the integration side to look at the strategy, and I think the strategy remains intact.
I think it's interesting also that the strategy of this consolidation is very different from AT&T to Verizon. When I look at what's happening on the Verizon side, I see you guys putting together a big pile of assets. You mentioned TechCrunch and Yahoo Sports, if you will, and Pulse and AOL, and all these smaller pieces of content, but a kaleidoscope of them. Whereas AT&T seems to be going big with Time Warner, HBO. That's their content play. I wonder if you could contrast those two strategies for me.
Sure. So first, I know the Time Warner strategy well. I was at Time Warner and we spun out of AOL. I have a lot of respect for Jeff Bewkes and the team at Time Warner. No Randall and no AT&T. Don't know their strategy and don't know exactly what their business model is. But I do know the Verizon business model, and I know the Verizon plan and the AOL plan, which is essentially to bet on where the future is going, which is very strong connectivity with 5G and connecting everything and everybody with fiber and speed and wireless connectivity. And the second piece is really digital consumption of content. And you don't have to look far and wide to see how much the linear TV landscape has changed to a digital-focused consumer. And I think if you contrast the strategies, you look out 5 or 10 years, that digital-focused, mobile-focused content strategy that Verizon has put into place, I think is a very strong strategy. And after spending 20 years in Silicon Valley in New York, and across the globe around the growth of digital, we wanted to put our bet with Verizon because we think digital and mobile and the connectivity that 5G is going to offer is going to be a tremendous, tremendous asset overall. So you have two big companies, two strategies, and a lot of room for tailwinds in the future of growth. So I think it'll be interesting to see where we end up 5 or 10 years from now, but feel very confident in what Verizon's strategy is, and the leadership at Verizon has done a very good job over the time executing long-term strategies. So I don't have any doubt that we'll be in the running and big player in the future.
Coming up, Bitcoin's rally has a new year lease of life. The cryptocurrency is hitting multi-year highs as it kicks off 2017. What's behind the jump? Next. Plus, Tesla's fourth quarter deliveries for its top-selling Model S missed estimates. We'll dig into what it means for the electric car maker next. This is Bloomberg. was the best performing currency of 2016, and it looks like Bitcoin still has room to run this new year. This week, the currency topped $1,000 for the first time in 3 years. We were joined by Michael Furtick, managing partner of newly launched VC firm Heroic Ventures, to discuss what's behind the pop.
95% of what happens on the blockchain is Bitcoin transactions. Very important that Bitcoin is very much the thing that people know and understand. But there are other things that are coming. There are dozens of cryptocurrencies that have launched. They're called alt currencies. Only a couple of them have gained any real traction. One that viewers might know is called Ethereum, which is run out of a place, sort of a combination of guys in New York and elsewhere. And that's already trained on one of the most reputable coin exchanges called Coinbase, which, by the way, I use. I should disclose. I'm not a shareholder, but I use it. There's another one called Ripple. Ripple is a cryptocurrency that is being put together in conjunction with a whole bunch of banks that are looking to do some sort of more oversighted, understood collateral work together collaboratively to manage a currency called Ripple. But there are others. There's a one called Monero, which is fully anonymous. There's one called Zcash, which is fully anonymous. And the frontier is very powerful. Why is Bitcoin so good? Because it's very simple to understand. It looks like the dollar. It looks like the euro. It's a piece of script. It's tradable. But also, that's its chief limitation. It can't do a lot more things. The promise of the blockchain, the excitement of the blockchain, is partly due to the fact that a token or a coin, depending on how you look at it, in the blockchain can not only have a currency value that's tradable, but also can have preset instructions. So it can be what's called a smart contract. You can preload the token with a set of rules to vote your shares a certain way, to get married if we want to get married, to get divorced if we want to get divorced, under certain conditions with if-then statements preloaded so that everyone knows.
It's a derivative, basically.
It's a derivative with rules that are preset, and you're kind of committed to the rules to behave a certain way under certain circumstances, and everyone in the contract can know that the contract is self-executing and self-realizing. So there's a lot of exciting new stuff happening on the frontier with Monero, with Ethereum, not just Bitcoin, but Bitcoin is still the one that really has the awareness of the public.
It's interesting because actually we were just talking about movements in Twitter in China. China seems to be a real driver of trading in Bitcoin.
Yes.
What has fostered this sudden resurgence to 3-year highs? Is it geopolitical risk? Is it the fact that Bitcoin's being used in more widely nowadays? Is it the fact that currencies are open to perhaps deflation?
You know, I think that is a very good question. I think that if I had to sit here today to answer the question, you put me on the spot, I would say probably it's mostly a speculative sort of turn in fortunes. It could be some geopolitical risk that people are buying Bitcoin instead of gold, let's say. But I think it's sort of, it was in favor for a while, super hot, got too hot, people took some money off the table now it's coming back in favor. The Chinese in Bitcoin are a big part of the puzzle. The Chinese are mining so much Bitcoin and have so much control of the Bitcoin blockchain that there's a risk in the community. There's a sense in the community that, in fact, China could actually take control of the Bitcoin currency. And that worries some of the people on the frontier. There's also a sense that Bitcoin is not really fully, truly anonymous. And if you're a rebellious believer in the revolution of cryptocurrency, which you don't have to be, Carolyn, is that some of the more truly anonymous currencies like Monero and Zcash are the wave of the future. And you've seen now that about a 20x, I think, spike in the value of a new one called Monero just in the last few weeks, partly due to the fact that it's coming online in some of the more sort of mainstream alt currency exchanges, but it's still very early days indeed.
And so, rebellious or not, if I'm a believer that cryptocurrencies will eventually come, when is 2017 finally the year where we see it become more adopted, more widely? Will it become something that everyone will know within their household?
What's so amazing, the real missing part of the link so far is, when will cryptocurrency, including Bitcoin, get wide, actual practical adoption? And it's still missing. Like even in Palo Alto, where I live, or San Francisco, where I hang out with you today on this rainy day.
I haven't seen many stores taking it yet.
They used to and they don't. And that's one of the most interesting things. You're exactly right. You used to be able to buy your coffee in Bitcoin. Why would you buy your coffee in Bitcoin? Nobody knows, but you used to be able to buy your coffee in Bitcoin because it's fun, it feels good, and now you can't. And so there's been a rollback of some of the applications. Now, I do think they're coming. As the banks in particular, as the clearinghouses in particular, start to bless the blockchain and have investment funds that are targeted for the blockchain and have all these activities for the blockchain and for Bitcoin, you are going to see more and more adoption. But still, as of yet, does it change my day-to-day life? No. Could you really spend your life through Bitcoin? Well, no. But I did find one founder this year. I met a lot of founders in 2016, and one founder I met doesn't have a bank account, doesn't use checks, doesn't have a credit card. The only way to pay him or get paid by him or do anything is through cryptocurrency, which is kind of weird. That's the first. N is 1, N equals 1, but I did meet one founder whose entire financial life is cryptocurrency.
Now to some other big news of the week. Tesla hitting some speed bumps. The car maker's latest delivery numbers missed estimates. Tesla delivered about 22,000 cars in the last quarter. That's below analyst expectations. And over 2016, the company produced nearly 84,000 vehicles and deliveries totaled about 76,000, also below company guidance. Bloomberg editor-at-large Corey Johnson joined us to discuss.
These weren't analyst estimates. These were what the company said, we will deliver this. And when an analyst said that seems high, they said, no, we will deliver this. Buy our stock, we will deliver these numbers. They put those numbers in the press release, they put those numbers in the shareholder letter, they put those numbers in their 10-Qs. They did not deliver what they said they would. In fact, in the quarter that they just announced these numbers for, they delivered fewer Model S's than a year ago, fewer Model S's than in the last quarter. So Model S sales are falling by any measure, and Model X sales are nowhere near what Model S is, and there has been delay after delay after delay for the Model 3. So none of this is good news.
And what about the Model 3? Because there is a lot of backlog in terms of waiting for demand. This is meant to be the more price-friendly version. How are we worried, therefore, about them getting off the machines?
What we know is that they have consistently missed virtually every deadline they've ever set. So we know we can expect that this deadline might be missed, or maybe they'll make this latest delayed deadline. They keep pushing it back by quarters and halves of years and then full years. So we'll see if they actually get to that. We also don't know what the price is going to be. Now these deposits are not actually deposits. They're deposits for a place to be in line, because in most places they can't legally take deposits. But these are also fully refundable. So for a lot of customers, we expect that these might be just sort of trying to get a foot in the door. A lot of people want these cars that they haven't seen before. But a lot of people also probably want the option to get the car, and it's really a price on the option, not actually someone who's going to take the car ultimately.
But after hours trading down just 2%, it's not a massive concern, it seems, to the market.
It's not to the market, and it's not till it is, right? I mean, look, this is a cult stock. This is stock people want to believe the very best in, but the numbers here are just not very strong. You saw the big dip in the stock right afterwards, but this is yet another company, I think, where the short-term trading in the market doesn't reflect the valuation of the company. The valuation of this company is based on hope for something that has yet to be delivered, obviously, because the company doesn't have generation of free cash flow. It doesn't have consistency in really anything here, except for these announcements that get people excited. But even this one is probably worrisome. I mean, if it's going to be a big business, it's going to have to grow. If their main product is selling less than it has both last quarter and last year, that's bad news.
Talking of big businesses and valuations, Apple, still most valuable company in the world. Expansion potentially when it's looking at India, China slowing down, the West slowing down, and maybe hitting some roadblocks of its own when it's looking at India.
Well, I think the developments for Apple in the last 24 hours or so are very interesting in India. They are pushing ahead in India big time. They hope to get some concessions from the government in terms of manufacturing cost and taxes. What instead they got was absolutely no. They got the Heisman, whatever the cricket equivalent is of the Heisman. That's what they got. I'll explain the Heisman to you later. Maybe you can tell me what the cricket.
Yeah, we'll do a swapping.
In college football, there's this big award called the Hyde. Anyway, in any case, they hope to get a break.
Yeah.
But they're still hiring. They've got Foxconn now coming into that country with expectation maybe Foxconn's going to make phones for the iPhone. Maybe they'll actually make Xiaomi phones or Samsung phones and continue to do things like that. Foxconn coming in, another contract manufacturer that Apple's used in the past, coming into India. They're hiring. Some of their postings for hiring shows that they're hiring operations managers and people to run factories or deal with factories in India. So Apple clearly is moving into this market, and they need to recapture growth in the iPhone, which they haven't had in the last year.
Bloomberg editor-at-large, Corey Johnson. Coming up, with cybersecurity concerns surrounding Russia front and center, we hear from former CIA Director Jim Woolsey on the president-elect's approach. And if you like Bloomberg News, check us out on the radio. You can now listen on the Bloomberg Radio app, Bloomberg.com, and in the US on Sirius XM. This is Bloomberg. Welcome back to the best of Bloomberg Technology. I'm Caroline Hyde. Cyber threats and security are emerging as a major tech concern for 2017, and it came to a head this week at the Senate's cybersecurity hearing, where Russia was front and center. Top US intelligence officials stood firm on their conclusion that Russia was behind hacking attacks during the presidential election. Intelligence officials said that only Russia's most senior officials could have authorized the data thefts and disclosures that happened during the recent election. We spoke with Bloomberg politics reporter Bill Ferries from Capitol Hill for the latest.
They said that they have, the three spy chiefs who met up on the Hill today said they have more confidence than they did in October when they first released the report saying Russia was behind it, that in fact was the case. And they pushed back quite a bit against some of the criticism, the public criticism they've received by Donald Trump, who said earlier this week that a briefing had been delayed and that he thought it was because they had to still build their case. The spy chiefs up on the Hill today made clear they think they have a very solid case. They're going to be up in New York presenting that case to the president-elect tomorrow.
And just talking of perhaps Trump's pushback, he took to Twitter once again, his favourite form of discussion. And he's talking actually about his association potentially with Julian Assange, saying he's denying that he's in agreement with Julian Assange, but saying that he's a big fan of intelligence. We're seeing the tweet right now on our screens. And what about this so-called unhelpful criticism? They didn't feel it was going in their way, but they weren't too critical of Donald Trump as they could have been.
Right. I mean, these guys all speak in a very nuanced tone, and they didn't single out Trump or his criticism directly. They did say that, you know, public criticism of their work isn't helpful. It's not good for morale. I think it's something they'd prefer, they'd prefer happen maybe behind the scenes. These are by nature very skeptical people. The intelligence community, spies, they're skeptical by nature. They ask a lot of questions, so they're accustomed to that. I don't think they're accustomed to being put in the public eye front and center. We've never really seen a time in the past when an incoming president so blatantly and publicly question their work before he takes office. Remember, there's a whole range of issues that the president-elect, when he takes office, will have to count on the intelligence agencies for, whether it's the latest assessments of Islamic State to China's moves in the South China Sea. Without that kind of information, a president is essentially flying blind.
Meantime, Trump continues to weigh appointments related to national security. This week, we learned former Indiana Senator Dan Coats is said to be Trump's leading candidate for Director of National Intelligence. Former CIA Director Jim Woolsey spoke to Bloomberg about, well, how we should be focusing on the bigger picture as Trump transitions into power.
This is a minor little blip. The intelligence business is full of controversy and arguments about assumptions and why did you do this, why did you issue that, then what do you mean by weapons of mass destruction, on and on. And this is a hiccup.
Respectfully, though, it seems like the president-elect is taking a different tone with the intelligence community than the acting president has, than previous presidents have. What's the relationship supposed to be like? What's it been like historically between the president and the intelligence community?
Well, the president ought to, by a few months, I think, into his administration, have been taught a good deal by the intelligence community about how things work. And it takes a bit of time because some of these areas are fairly technically complex. But as you learn about them, you get to do a better job, I think, of understanding what we know and what we could draw conclusions from. So it's a kind of a older teacher-student relationship, but the student is the president of the United States and the holder of the position that one might say is the most important and powerful in the world. So it's a different kind of relationship. The presidents, I've worked with 4 presidents, 2 Republicans, 2 Democrats, and they've all been willing to hear out a different take on things. And I have no reason to believe that Donald Trump won't do the same. I think that it's important that the intelligence community help the new president and not kind of sit back there and kibitz and criticize.
Let me take your metaphor there about teaching. I've heard past presidents talk about the immediate reverence they have for those reports that they receive on a daily basis, those briefings, how awesome, for lack of a better word, it is to get all of that information. Again, playing out this metaphor further, is Donald Trump spending enough time in class? Are you satisfied he's being briefed enough?
Well, there's more than one way to run a class. You can have seminars, you can have lectures, you can have lots of things. And in the 2 years I was Director of Central Intelligence for President Bill Clinton, he never had a morning briefing. He didn't like to be briefed. He didn't like to have stuff read to him. He was a speed reader, is, I suppose, still a speed reader, and he liked to go through things quickly and then maybe ask some questions on the side, write a note in a book or a book of briefings. Jim, this fourth point seems to me to track what Kaplan has in his new book, if you read it yet. Bill Clinton did things like that all the time, which was different than sitting there and taking the morning briefing. But that's the way he wanted to work. And however the President of the United States, in this case to be for the next 4 years anyway, Donald Trump, wants to have information presented to him, people need to accommodate him and not kind of sit back there and just kind of grumble about it to the press.
Let me return to that previous tweet, and let's give him the benefit of the doubt and say perhaps he was joking about the matter here. I wonder what you would say to somebody in the intelligence community who doesn't welcome this kind of skepticism from the president-elect, who wonders about the publicity associated with his or her job, who questions perhaps the president-elect's commitment to the intelligence community and the job that it does.
I'd say pull yourself together and get back to work or find a different job. Intelligence is important enough, tough enough, and from time to time angry enough that it's important not to get distracted by small matters. You got to call it straight. If somebody comes at you, whether it's a secretary of a cabinet secretary or vice president or even the president, national security advisor, and tries to push you off a point and you think you're right, you address it clearly. Here's why I think this is right. I believe, based just on the couple of meetings I've had with him, that Donald Trump is a fair-minded, balanced individual who talks rationally, quite reasonably about matters in small groups.
Coming up, the tech surprise stories of 2017, from FANG dominance to Yelp M&A. We discuss the potential winners that investors should keep an eye on. This is Bloomberg. Online publishing company Medium is cutting a third of its staff, or roughly 50 people, as it announced it's changing its business model. The company, started by Twitter co-founder Ev Williams, has relied on the same model as other media companies to make money, placing ads on articles. In a blog post Wednesday, Williams called that model broken. The job cuts mostly fall on the company's sales and business side. And we're continuing to monitor the departures at Twitter. Cathy Chen, the company's top executive in China, is leaving Twitter after 8 months on the job. Chen announced on Twitter she's taking time off to pursue more international opportunities. Chen was hired to seek out new advertising revenue and other business in China and Taiwan. Now to tech sector surprises of 2017. RBC is predicting that Amazon will undergo a major investment cycle this year. Well, that's not a new concern for investors who've worried about the company's bets on original content and ramped up shipping efforts. But RBC says Amazon's reached a point where it can shell out big bucks and still boost its margins. This, as the company says, the number of merchants using its logistics service rose 70% to more than 2 billion in 2016. And its virtual assistant, Alexa, makes waves in new home appliance partnerships at CES. For more on Amazon and the rest of his top tech surprises to watch this year, we caught up with RBC Capital Markets analyst Mark Mahaney.
The one big difference between Amazon today and Amazon 5, 10, 15, 20 years ago is that they've got this business called AWS, Amazon Web Services, the cloud business, which has got margins that are 10x greater than its core retail business. 25% margins, operating margins versus 2.5%, 3%. And what that means is that they've got a lot more cash with which to make investments, and they're saying it quite loudly. We're going to make aggressive investments, but we believe we've reached a point of scale where we can do that and still run the business profitably. I think that cloud cushion, if you will, cloud cash cushion, allows them to do that.
It's one of your top picks for 2017
Yes.
in terms of investments. The FANGs overall, so adding Facebook to that, Netflix. Let's have a look at where potentially the FANGs could perform versus S&P. We've got a chart for you, and we saw last year, not so pretty. They did lag the S&P 500 overall as a benchmark. What about 2017?
So 2015 was the year of dramatic outperformance. It is rare, very rare, to see outperformance 2 years in a row, especially after that magnitude. That group of stocks rose over 80% in 2015. Going into 2016, frankly, up until the Trump election, the sector actually had outperformed, and then we've had this Trump rotation away from growth. I'm not sure how long that lasts. I fully respect that that's going to be a headwind for a while, but we think there's one or two really interesting stories in the large cap internet space and amongst the FANG names. First is Netflix. We think they can add more subs in both U.S. and international markets in 17 than in 16. If we're right on that, we think the stock goes higher. And secondly, Facebook. Facebook modestly outperformed the market this last year, but it's dramatically derated. The multiples come down a lot. It's at a point now, for the first time in 3 years, we think we can make money on the long side, both on estimates revisions, upwards estimates revisions, and on the multiple going up.
Just looking at the chart there, we saw that Facebook they actually performed in order of their letters. We had Facebook win, then Amazon, then Netflix, then Google was the laggard for 2016. But therefore, they can beat the overall market. Google, I want to dig into the laggard of 2016, because you say that actually finally some of their outside bets could actually bring in some money?
Well, so that would be a surprise. And when we say surprise, we think it's something that probably won't happen, but the odds are greater than the market ascribes to. Netflix is also, its multiple has come down because people have become very skeptical about the other bets. Where is the money coming out of autonomous vehicles? What about Nest and home automation? We haven't seen anything. Google Fiber has been cut back, and there's been some management changes amongst those bets. So the market has kind of tuned out that segment, and we think there's enough interesting bets that are put in there, enough people, and enough, when it comes to autonomous vehicles, there's probably one or two or three winners, and we think Google could be one of those. When is hard to know, but we think if any one of those bets starts to show any materiality at all, that would be the surprise for investors.
Talking of winners, and therefore let's shift it to losers, you actually think the market is too optimistic on the pain setter that is Twitter?
Boy, that stock has underperformed 2 years in a row. We think it could be the case again this year. It's our sell in the large cap space. And the street believes that there's going to be a reacceleration, even if modest, a reacceleration in growth this year.
Revenue could rise about
growth.
10%.
Yeah, and that could be a risk. We actually think there's a reasonable scenario under which revenues actually decline. This company literally goes X growth. We're not seeing it in terms of advertiser interest. I know President-elect Trump is interested in Twitter.
What do you call him?
President-elect Trump.
Yeah,
oh, the tweeter, yes.
What do you call it?
A tweeter in chief, I think is what we call
that.
it. But outside of him, we haven't seen major advertisers, fully embrace Twitter. And in fact, at the margin, they seem to be pulling away from it. That's a problem.
So Twitter, it doesn't look too pretty, despite the tweeter in chief, as you call him. A little bit more about the politics side of things, though, because you're saying this is still a bit of a concern when it comes to the FANG investment. But overall, maybe one of the surprise calls is that actually Trump doesn't change the tech outlook at all.
Well, so two things. One is there clearly has been a rotation towards new areas. I mean, this has been a very slow growth economy for a while. And so premium growth stocks like the FANG names, like the internet names, the high quality ones have outperformed. Now that the rest of the economic growth seems to be picking up, I get the point that there's less of a need to pay for premium for growth because there's growth in other parts of the economy. In terms of whether Trump would actually have an impact, President Trump would actually have an impact on the internet stocks, it's unlikely, but there's two areas that we watch out for. Net neutrality, changes there could negatively impact Netflix. And then this talk about these border adjustment taxes or putting taxes on changing how you would allocate costs to companies, that's something that could have material negative impact on Amazon. We don't think that's going to come to pass, but those are two watch areas for us.
And one outside bet, just to leave us wowing with, it was a call last year and it didn't come to bear, but will Yelp get bought out this year?
We like the company fundamentally. That said, we've also liked it for the last 2.5 years as a strategic asset. It's $2 to $3 billion. It's a great play off local advertising, albeit just in the U.S., and possibly local transactions. So we think there's a range of bidders out there, and we actually think now you've got a more willing seller than you did a year ago. And in order to have a sale, it takes two, and this time you finally got a seller that's willing to sell.
That was RBC Capital Markets analyst Mark Mahaney. In another funding board this week, Silicon Valley startup Proterra says it raised $140 million in a fifth and final funding round as it ramps up manufacturing ahead of a potential IPO. The electric transit bus maker expects to go public this year or early 2018. GM and Teo Capital are said to be backers. Proterra debuted a vehicle last year that can travel 350 miles on a single charge. Coming up, after months of anticipation, another glitzy unveiling for electric car startup Faraday Future. But not all went smoothly on stage. We'll tell you why. And a reminder that all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays at 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. It was a huge week for the auto industry. Here are a few headlines that caught our attention. Fiat Chrysler unveils a battery-powered self-driving minivan. The Chrysler Portal has a 250-mile electric range. Software would take care of most of the driving. However, it's a concept car, and there's no guarantee it will ever be built. Intel is seeking to buy a stake in the mapping consortium named HERE, which is jointly owned by German automakers. Intel must pass a German antitrust inquiry before the sale proceed. The company applied for permission on Monday and will receive an answer to its application in a month. And Ford announced it's cancelling plans to build a $1.6 billion plant in Mexico. Instead, it will spend $700 million expanding its existing plant in Michigan to build self-driving and electric vehicles. Ford CEO Mark Fields explained Ford's dominance in the hybrid and electric market on Bloomberg.
We are the #1 seller of plug-in hybrids here in the United States today, and the #2 seller overall for electrified vehicles. So we want to build on that. You can see that through our announcements today. And keep in mind, we only talked about 7 of the 13 electrified vehicles that are coming. So there's more to come.
And staying with car tech, CES 2017 has brought us another glitzy unveiling from the much-hyped electric car startup Faraday Future. After showing off a concept car last year, the company came back with its first production model. It's called the FF91, and Faraday claims it can outpace a Tesla Model S in so-called ludicrous mode, claiming the crown of the world's fastest electric car, going from 0 to 60 in 2.39 seconds. Also like Tesla, it's backed by an ambitious billionaire, the founder and CEO of the Chinese tech conglomerate, LeEco. We discussed with editor-at-large Corey Johnson and Bloomberg Technology's Selena Wang, who covers LeEco.
It's interesting to see how many companies are able to work in this kind of technologies. It is not Tesla's game alone. We tend to focus on Tesla, I think, in Silicon Valley so much because it's a Silicon Valley company. But in fact, the automakers from as startups like this or companies like Ford and many others, Audi, BMW, all working on a lot of these ideas. Porsche, interestingly, a lot of interesting work around electric cars. So this is Tesla might have pointed the way, but a lot of companies are coming very fast into this space.
Selena, the Chinese billionaire was there at the event. In fact, it was him where it was the slightly embarrassment made that the car didn't quite park. I think he called it a bit lazy that day. But tell us a little bit more about the billionaire behind this company.
So the billionaire behind it, Zhao Youting, he goes by YT. He's very well known in China. He's known for being very brash, very ambitious, sometimes too ambitious. He actually started out as the local IT guy at his tax bureau, and he's really made his fortunes in the publicly traded company Lesi, which is basically kind of like the Netflix of China. It's been growing very fast. But from there, he's quickly expanded into a slew of other businesses ranging from smartphones, VR headsets, TVs, movies, smart bikes, you name it, and he's expanded into it. But recently we're seeing that he may have expanded a bit too aggressively. He wrote in an internal memo to employees recently that they're moving too fast and they're having trouble raising cash. But again, he's a very brash, well-known person in China. He said things like Apple is a very slow innovator and we can outbeat Elon Musk and Tesla.
Outbeat another rather ambitious man who sets high targets, which is Elon Musk.
You pointed out the self-parking problem. When the Tesla Model X was first unveiled down in Los Angeles, Elon Musk couldn't get the trunk to open. And when they got another model where he's showing it off, he got out of the car and smacked his head when he was trying to show off how well the headroom the car had. It showed how little it has. Now he's a very tall guy, but nonetheless, these sort of live demos, a la Steve Jobs, are hard to pull off. And it's interesting. You see every CEO of every kind of industry now think they've got to go on the stage, quite often in blue jeans and a black turtleneck, and introduce their products as opposed to the ways that cars and other devices used to be released.
One thing I tend to find at tech conferences is the technology doesn't work, and certainly neither does the Wi-Fi. But Selena, talk to us about the money that has been put into this particular element, Faraday, when it comes to the billionaire. How much money is he winning? Is he losing? When do these things start to sell?
So, I mean, he put in $300 million of his own money into this. He has a very kind of unique way of financing his ventures. He basically pledges his shares in his publicly traded company and plows it into all of his ventures. We learned at CES that you can reserve this car for $5,000. It's unclear how much this is going to retail for when it comes out, apparently in 2018. I think that after last year's CES, there was a lot of skepticism around Faraday Future since they didn't release any functioning car. It was merely a concept car, and this year we got an actual functioning car, but we still have a lot of questions hanging in the air. Lots of skepticism around how are they going to make money. This is incredibly expensive to produce. It's unclear what the business plan is going to look like.
5,000 to order. It was only 1,000 when it came to a Tesla. Talk to us a little bit more today, Corey, about what's going on with Tesla, because it's not all about cars. We forget that it does have a gigafactory, and that's running, and they've hit their deadline.
Well, we'll see what the actual production is out of that. Tesla has a history of not hitting its deadlines and missing its own estimates, as we've discussed. It's also interesting, this production issue, right, which is going to happen to all these car makers. Production is hard. Tesla this quarter said that they had production problems. They couldn't get as many cars out as they want. They said they had the same excuse for missing numbers in the first quarter. So these recurring problems about being able to produce as much as they thought they were and doing it successfully is really hard with this business that is the Model X and the Model S. Now, when they want to get to a much larger level of, they would have to more than double production this year and the next year, which they've been unable to do, in order to get the levels of Model 3 that they want to produce.
But the Gigafactory, today that's the news coming from Tesla, and the shares are popping. They're up more than 4%, even though we saw them fall after hours yesterday on the concerns of the car part of the business. Gigafactory up, running, they've hit their deadline.
The factory is running. How much they're producing, though, is a question mark. And we'll see what they actually produce over time, and if there's any value there, and if there's demand for this product, right? Where there are dozens and dozens and dozens of competitors who can hang a battery in your garage for questionable use.
Selena, what do you think about some of the debate that's going on when it comes to CES, of course, of who wins, whether it's indeed the tech companies or it's the auto companies, but Faraday wants to own the data. I mean, what is the value in selling these cars? Is it all from what they make in terms of profitability on the actual car itself, or where does this billionaire's vision go?
Yeah, I want to talk about this in the context of Lakeview, because they have a kind of a very unique vision. I had a chance to sit down with YT at their headquarters a few months ago, and he laid out this very broad vision of what he wants a consumer to experience. So imagine this. You have your Leico cell phone, you start watching a Leico movie on it. Then you may hail an autonomous Leico electric vehicle where you continue to watch that movie in the car. And then you exit the car, you finish where you left off, you watch it on a Leico, a VR headset, and then continue on a Leico smart TV. So as you can tell from this scenario, cars are a really integral part of this vision, because YT sees a future of electric vehicles, of autonomous cars, and that car, that vehicle is another place to watch content. And let's remember that this company actually started as a software content maker, and all of these devices and hardware, cars, smartphones, you name it, is all just shells to hold all of their software. So in the context of YT, it's a very, very broad vision he has.
That was Bloomberg Technology's Selena Wang and our editor-at-large, Corey Johnson. That does it for this edition of Best of Bloomberg Technology. We'll bring you all the latest in tech throughout the week. Tune in each day at 5 p.m. New York, 2 p.m. San Francisco, and 6 a.m. in Hong Kong. Be sure to catch our show Monday, when we'll hear from EU Competition Commissioner Margaret Vestager on the EU's case against Apple's tax policy. That's all for now. This is Bloomberg.